Hi, it's Dave. Welcome. Today, this is part two of a conversation I'm having with Matt Smith. He is the creator of a YouTube channel called Spark Spread and also active on Twitter. He's a Tesla investor. He also has a background in energy. And I wanted to invite him on this channel to talk about Tesla energy, to break down the different parts, what we can expect with Tesla energy going forward, how to value it maybe 5 or 10 years down the road. If you're interested, part one was about Cybertruck and how Matt reserved 21 Cybertrucks to be a fleet operator. So check out that episode before Tesla closes the loophole. Anyways, Matt, I want to welcome you again to the channel.
Thanks, Dave.
All right, man. So I know you're a Tesla investor. Um,
hmm
Curious, how often do you check the stock price every day?
Oh, more than I should. Yeah. It's pretty much always up in the background, and
Mhm.
I have noticed that I've probably taken a hit to my productivity by checking it too much.
Yeah. When did
I,
you?
I have. What's that?
Go ahead.
No, that's. I was just gonna say, I've started doing some of the Gary Black strategy of selling, the weekly
Got
call
it.
options,
Yeah.
and I think ever since I've done that, that's I think opened the door to more frequent checking than maybe I'd otherwise like.
Exactly. When did you get started investing into Tesla?
I think it was 2017. It was either late 2017 or early 2018. In addition to energy, I have a kind of a background in valuation and in investment banking. So, I'd loved Tesla for a long time. I actually applied to work at Tesla back in, I think it was 2009. Drove a car, drove a Model S in, 2013. Always loved it, but, just with my finance background, I always thought the valuation was crazy.
Hmm.
Um, but I started listening to the earnings calls in 2017, and then when Elon started talking about autonomy and the real kind of first principles, like physics based reasons why it made sense, like a lot of that really clicked in my mind. And his approach was so differentiated, not using lidar, and so that's when I started seeing, okay, not only is there this thriving just EV business that's yet to be profitable, but you know has some promise to be. But if they can solve autonomy, then that's just a drastically larger share price implication than the 250 pre-split level that it had kind of been hovering around for a long time. So that's kind of what convinced me to go more aggressively in the stock. And then just as I did that, I started digging in and learned a lot more about it, and just became way more
Hmm.
aggressive and interested in Tesla.
Hmm. What percent of your portfolio is in Tesla?
So I have a traditional 401k, which is not Tesla. But yeah, like of my other portfolio, it's 90% plus, I'd say.
Got it.
So
Um, I'm
impressive.
Yeah. We in our first episode, our first part, we talked about Tesla full self-driving and just the potential with that. And in this episode, I wanted to talk about Tesla Energy, get your thoughts on how to look at it going forward. A lot of people think of Tesla as just an auto company, but like as an auto company by itself, it's a hyper competitive, low margin business. You're not going to get valued that much. But Tesla, on top of that, they have this whole full self-driving, autonomous driving, which is a huge, new market. And then they also have this Tesla Energy division. So I want to ask you, I guess first off, some people, like for example, ARK Invest, have decided not to include Tesla Energy in their more midterm price targets. So I think in 2025, ARK Invest's base case is $3,000, but they chose to leave off Tesla Energy because they look at Tesla Energy as they think the revenue will be decently significant, but they look at more of it as a hedge or a buffer for their auto production, where because auto production is cyclical,
Mm-hmm.
during times where demand is low, they can beef up their energy, cell production, etc. So they're not really looking at it as a major, profit driver. What's your opinion? Do you think are you including it in a 2025 model? Do you think it's significant? What's your thoughts?
Yeah, so I I did pretty much the same thing that ARK did, in 2019 when I was kind of coming up with my valuation models. It's so small right now. I mean, it's basically rounding error right now. last quarter, the gross margins were even negative. So, you could argue that even a negative value driver. I don't believe that, but there's at least an argument to be made there. So I'm certainly sympathetic to ARC's approach because I was right there with them, a year ago. But just having the background that I have, and listening to a lot of the stuff that Elon has said, I'm like, okay, clearly they have plans, but they've not been very public with what those are. So I started trying to kind of piece it together myself over the last year or so. And so, yeah, I am including it now in my evaluation. I think, let me see what I have here. It's not a huge piece of the overall pie. So, in my evaluation, I'm coming up with $354 on the energy side, between, the hardware components, solar and storage, as well as, the software side, which I think to your point about, like there's the auto business and there's full self-driving. I think the energy side is going to be the same way, where you've got, like the hardware sales, but then there's services that hardware can be enabled to provide, that can create cash flow for the business. But I think it's going to be a lot harder than on the automotive side. So, yeah, I think it's right that it's a small-ish percentage of the overall, business, at least if you're doing a discounted cash flow to today. But in 2030, if you fast forward, I think there's a strong case to be made that at that point, it'll be a much larger portion of the value.
Hmm. So you're attributing 300 and something dollars per share in 2030. Is that correct?
350. Well, so I've done a discounted cash flow.
Hmm.
So, I've done out to 2030,
Hmm.
and then a
Got it.
terminal value, and then I'm discounting that back to today.
Hmm.
So, I'm saying $354
Discounted
impact,
today.
discounted to
Sure.
today.
Sure.
Um, but there's a huge amount of, I would say I have less confidence on this side of the business than I do on the automotive, just because Tesla has not really shared any of their details. So I've tried to piece together and make some reasonable assumptions. But I think there are some, legitimate open questions. The biggest of which, in my mind, is, they talked about 3 terawatt hours by 2030. If you do the math, that leaves like half of that's for energy. Um, that is a gigantic amount of batteries. And just like I've run the math on, like, from a utility standpoint of, putting batteries on the grid, and it's marginal at best right now. So I think you see a lot of Tesla investors talk about Hornsdale and be like, oh, this is just a big cash cow, and they're right, but that's a very unique project that's not really replicable at scale. And the other problem with batteries is that the more you add to them, so like if you're trying to take advantage of on-peak and off-peak prices, the first batteries that you put in, can generate the most profit. But then if you just saturate the market with more batteries, then the peak and the trough, delta gets compressed down. So at scale, it's actually harder to make profit on batteries. Um, so, I've done a lot of thinking about this, and I really think that the huge opportunity relies on the residential side, for reasons we can get into if you want. But that's the spot, I think, where batteries are going to be most economic, and that's where you can, like, truly disrupt with minimal regulatory requirements, which in the energy space is a huge deal.
Yeah, I mean, it's fascinating. So let's dive into kind of Tesla Energy. So,
Hmm.
what are the major parts? So you have Tesla Solar, and under solar you have solar panels and solar roof, and
Hmm.
then you have Tesla Energy, or Tesla, storage, energy storage with their utility grade, mega packs, etc. And then
Megapack.
you have your residential with their Powerwalls.
Hmm.
And then on top of this, I noticed you've also kind of, looked into energy as a service. So
Hmm.
providing, grid services to make the grids more stable, to maybe offset peak, hours, etc. So can you give us kind of a picture, a rundown of how you see Tesla Energy? Where is the biggest potential? Is it in solar roof? Is it in solar panels? Is it in storage? You said residential, you're really looking at something with potential. Is that because of the hardware sales, or is it because of the energy as a service, the grid services that it'll provide, or what's kind of your breakdown?
Yeah. So, lot to unpack there. I'll do my best, but so let's start with the residential side. I think the reason that I'm the most bullish there is because you can put the hardware what's called behind the meter. So, like if you have a solar roof and Powerwall, that's powering your house directly, and you can do that with kind of minimal interconnection requirements from your utility. And if you make it large enough, you can actually disconnect altogether from your utility. Um, on top of that, residential pricing for energy is the highest of all pricing. So, um, in my previous job, I oversaw wind plants and biomass power plants, and you're selling energy. Generally speaking, it's somewhere in the $20 per megawatt hour to, on a good day, like $35 per megawatt hour. And in some regions, like in Texas, more like $15 to $20. So that translates to like 1.5 cents per kilowatt hour. So if you're trying to introduce, batteries or, solar into that environment, the economics just don't pencil very well. But when you look at something in the residential neighborhood, then not only are you saving on the energy generation, and your utility may charge you, 3.5 cents, 4.5 cents per kilowatt hour for the generation, but then you're going to pay another 70 cents or so, or sorry, 7 cents or so for the transmission and for the distribution. And I think a lot of consumers probably think that they're paying, for the electrons to be generated and put to their house, but actually a larger percentage of the overall cost they pay is the transportation through transmission and distribution to their house. So if you kind of flip the current model, which is centralized electricity generation, if you flip that on its head and go to a distributed energy generation model, that's where you can offset the most amount of cost. So you're not just undercutting, utility generation prices. You're actually avoiding all sorts of potentially unnecessary infrastructure in transmission and distribution. So that's where I think the economics will pencil the best for end users. And so I've kind of started my analysis with that assumption that true disruption and the best kind of economic bang for your buck is going to be by having, behind the meter, mostly residential, but also some commercial and industrial generation and storage. So that's kind of the overall framework. And then, from there, I think the scale that Elon's talking about, 1.5 terawatt hours of capacity, by 2030, which means if you're looking at like the cumulative deployed base of battery assets that they're trying to target by the year 2030. I mean, it's absolutely massive. And so what I did is I kind of compared that scale of batteries that they've outlined with some reasonable revenue assumptions, and compared that to what they've said on the hardware side. So Elon has said on solar that he wants to get to a long-term goal of 20,000 solar roofs per week. So I was looking at like, okay, what does that translate to in terms of revenue? And it's kind of small. I forget the exact numbers that I came up with, but it's like a relatively small drop in the bucket. And same thing, if you were just to assume, let's say that you've got those 20,000 roofs a week over the course of a year, and you put 2 Powerwalls on average, with those units. That still is like a drop in the bucket of the total capacity that they're saying they want to have. It was something like 1% of the 1.5 terawatt hours. So that was kind of shocking to me to kind of say something about this math doesn't add up. So then I started thinking, well, maybe they're going to drastically increase the size of their batteries. And if they did that, so if a Powerwall went from like 14 kilowatt hours to 140 kilowatt hours at a price that wasn't awful, then you can have like absolutely massive disruption by people disconnecting from the utilities. You could have multiple weeks worth of storage, and you can potentially economically go off grid, which just has huge implications for the whole industry. So I think that's kind of the path that they're going down, but that there's a lot of speculation in there, admittedly.
Yeah. No, this is quite fascinating stuff. So, I mean, at 140, kilowatt hour, let's say home battery pack Powerwall, what price? I mean, what are the economics here? Like, like what can they charge for it? So, how low can they get their battery costs down? Like hypothetically, if it's $50 per kilowatt hour times 140, that's what, $8,000. So,
Mm-hmm.
I mean, if they give it at cost, somehow figure out like to make it all in cost,
Yeah.
right, at $50
So
per kilowatt hour, that's pretty impressive. I mean, $8,000 for a
right.
140.
Your $50 figure, right, is the cell cost.
Mhm,
But that's a really important component of it. So the other piece, the other angle I was taking when I started thinking about this stuff was, um, okay, right now their Powerwall, I think it's like 500, or it's somewhere around $500 per kilowatt hour. And so then I started thinking, how can they lower that cost?
mhm.
And it seemed to me that the easiest thing to do, if your cell component is, let's say in the future, with the new technology, $50 a kilowatt hour, like you said, well, if you just make the scale, 10 times bigger, um, then you can amortize, some of the other, like inverters and the casing and installation, some of those other, costly components of the overall price. You can amortize those over a much larger base. And so I don't think you'll necessarily get down to $50 a kilowatt hour, but maybe, installed with the packaging and everything, maybe you can get it to 75 or, $100 a kilowatt hour.
Mhm.
Um, but still, that's not an awful price.
Mhm.
And if they can get the price down there, then
Yeah.
it has huge implications for the industry.
Yeah, definitely. And especially 10 years down the road, the price per kilowatt hour might actually be significantly lower than even 50. Um,
Hmm.
but yeah,
Yeah,
um,
exactly.
yeah,
But if you think about it, like, if you can have 2 weeks of storage for
yeah,
$14,000, and you pair that with solar, then all of a sudden you never need to pay a utility bill again. I've done the math, and
yeah.
it's like that's actually a good financial decision on top of being green and
Mhm.
just a good consumer experience.
Yeah, yeah, definitely. What role does, grid services or energy as a service kind of play? How much does it make it more attractive to own, let's say, a solar roof or solar panels and Tesla power walls and even a Tesla car? Like, does this move the needle in terms of the actual benefit, right, a owner would accrue?
I, to be honest, I don't think it does move the needle a whole lot. A lot of it depends on how it pans out. Um, but with these assumptions I've been doing, so I did a lot of research on what are all the different pilot programs that are out there. So, Vermont's got a program, Vermont Co-op, I forget the exact co-op, electric co-op, where they'll essentially subsidize a power wall for you, and you can then the utility can then kind of use it as emergency backup, and they'll provide some other services to the grid. So there's a lot of different regions that have similar programs like that out there. So I went through and kind of looked at what did those translate to on a dollar per kilowatt hour per month basis. And kind of what I came up with is right now the pricing is somewhere around $1.50 per kilowatt hour per month. And so if you just start scaling this up, it is a meaningful revenue stream, but it's nothing that really compares to even the hardware component of the sales, let alone the auto side of the business.
Mhm.
But that said, I think the important thing to keep in mind is that these are 15, 30 year like long lived assets, and they are increasing at a rapid scale. So not only so you've got deployments increasing at a very rapid exponential scale, but then if you flip that and say, okay, energy as a service will not be off of new sales, it will be off of the cumulative deployed base of hardware asset, like energy assets out there.
Mhm.
So when you start thinking about it that way, and then you've got like a delivery curve that looks like this, then you'll have like a cumulative base that is just like almost a straight line up. So even at relatively low prices, if you fast forward a decade, say, to the point where you've got tens of terawatt hours potentially of storage out there, plus many either gigawatts or terawatts of solar, then even if the revenue streams for these ancillary services are quite small, just the deployed base of assets is going to be so astronomical that it's very high margin, revenue that will be kind of made on the back of those assets.
Hmm. Do you think Tesla will split that type of revenue at all with the owner, or will they just give it to the owner kind of as a benefit?
I think they'll have to. So if the owner is going to pay you for the hardware, you can't nearly justify Tesla having complete control over, when those batteries charge and discharge, without the customer agreeing to that and probably having a share in the profits. So, I think right now you see Tesla working with a lot of different partners to kind of like in the UK, they've got um, a defined, energy rate that, you kind of agree to certain terms where they'll use your batteries in a certain way to kind of benefit the grid and their partner. But you get a lower rate out of the deal. So it's going to pan out. Regulations in different countries and even like in different states and cities are so drastically different, that I think exactly how the model looks is going to vary quite a bit region to region. But I think you're going to have to split it.
Interesting. How serious is Tesla with Autobidder? And how big of a market really is that? Is it something that's kind of more nascent, just slow and growing, or does this have a lot of potential? And for those who don't know, maybe you can explain Autobidder a bit.
Yeah, so I think there's maybe some confusion on Autobidder, because it basically is an intelligence, for like I think of it really as like a decision making artificial intelligence. So you have, let's just say we're looking at a residential customer, and you've got like a set price that you can either buy or sell electricity for. And you also have like a car that needs to be charged, and you've got a certain amount of solar hitting your roof. Um, Autobidder is kind of the decision making software that decides, okay, we're going to charge the Powerwall up to here, or we're going to discharge at this time to, make some money by selling to the grid, or we're going to, charge the battery up because prices are low. There are, if you look at like the entire fleet of assets that Tesla has, there are millions of decisions that need to be made like at discrete geographic locations. And it's going to be different decisions everywhere, based on the customer's needs and preferences, based on local energy pricing, based on local market structures. Like, can you even export to the grid in certain areas? It really depends. But then at the same time, you've got it being used on projects like, Hornsdale, where, you've got very large arbitrage opportunities, energy pricing arbitrage opportunities. And it's certainly making a good amount of money there as well. So I don't necessarily view Autobidder as like there's a market for Autobidder in like pricing necessarily. I really do view it more of like the decision making matrix, that the hardware that's out there, how it's going to optimize with the localized market conditions around that particular asset. And it's like impossible to try to quantify that,
Got
to
it.
be honest.
I mean, would you say Autobidder is more of a way to leverage and maximize, the existing assets, or basically, your storage, whether it's your power walls or your car, hypothetically, if it could do vehicle to grid, and
Hmm.
it will intelligently, manage this like huge web of Tesla, storage and distributed, energy, in a way where it could provide energy to the grid. And by doing so, it adds some value to the owner, but you're saying that is yet to be completely quantifiable.
Yeah, so you can certainly quantify it like on a individual project basis. That's no problem necessarily, but it's just Autobidder can be used for like so many different things that it's very hard to kind of get like a universal, use case for it, because they really will be different. But maybe just to give like an example, so I just installed a level 2 charger at home, and so now, through my local utility, I got access to like different on peak and off peak pricing. So, like I forget what it is, but something like 3 cents if I charge between midnight and 8 a.m.
Wow, that's
And
low. Yeah.
yeah,
Yeah.
yeah,
Wow.
yeah. It might be slightly higher than that. I can't
Okay.
remember, but then it's like punitive if I charge during the day. It's like,
Yeah.
18 cents or something like that. Um, so I know what my local utility is doing is, they've got prices that vary drastically throughout the day. And based on my background, I know that in MISO, which is the grid operator where I'm located, MISO actually has real-time locational pricing every 5 minutes that the utilities are constantly bidding into. And so what the utility is trying to do by giving me these tiered rate structures is to kind of approximate the overall cost that they're getting. But it's a crude approximation. I mean, they're giving huge hourly, multiple hour chunks that they're using to kind of approximate, the 5 minute interval data that the grid is really using in real time. So I think what Autobidder should be capable of doing down the road, if regulations kind of open up for Tesla to access these, is to aggregate all these very small, batteries that are, you've got a 14 kilowatt hour pack in your garage, and maybe if V2G happens, or even without V2G, you can actually access some value just by indicating when your vehicle should charge. But if you can have Tesla kind of aggregate all of these disparate assets spread throughout a whole region, and then say, hey, I can prove to you, grid operator, MISO, PJM, whoever the grid operator is locally, that I can instantaneously reduce demand to access these, 5 minute interval prices. Then you've got like something that nobody can really compete with, or very, very few companies can really compete with, because to get it at scale where you can be reacting intelligently, like in 5 minute intervals, is like very difficult to do. And I think many utilities would kind of struggle to do that with distributed assets like batteries. Mm-hmm. So yeah, I'm very excited about it, but it's going to be very strange to see how it pans out, because I think some people will fight it. Some jurisdictions will just say, no, you can't access that. But if you're going to assume that Tesla has the kind of scale that Elon has said they want to have, it would just be crazy for them not to try to mm-hmm. access these supplemental revenue streams.
Mm-hmm. Got it. Recently, there's been news that Tesla has increased their solar roof price, and they've mm-hmm. added kind of like an option to choose different configurations for your roof, like a simple and more advanced one.
Yeah.
Is that concerning to you at all, that actually Tesla has increased their price? Do you think it's indicative of some type of scaling problem, or maybe higher expenses than they maybe initially anticipated for solar roof? What's your take on kind of where solar roof is in the bigger picture?
Yeah, so I think we're definitely still in the very early ramp of solar roof. I was listening to Emmett Peppers describe the installation process on his roof, and it was like a week to get the old roof off, and then I think he was like a week or 2 weeks to do the Powerwalls, and then the new shingles. And that's too long. Like to do this at scale, cost effectively, they've got to get not only their manufacturing process of the solar panels, the solar tiles, down, which it sounds like they haven't quite ramped that fully yet in Buffalo. But I think the bigger piece, affecting gross margins for energy is the installation process. Mm-hmm. I mean, they went on a huge hiring binge. I think it was in Q3, maybe it was Q4 last year, where they just hired all these solar installation teams like throughout the country, throughout the United States. And in my mind, it's way too early to be expecting any sort of reasonable gross profits when these teams are still trying to figure out how to like efficiently and effectively install these on a variety of different roof types. So to me, that's the metric I'd be watching more closely is what is the normal consumer, how long does their installation process take? Because I think that's going to be a bigger driver of gross margin. And I think once they can get that down to, I don't know, call it a week or something, hopefully Elon has said he wanted to do it in like a day, at least the tile installation part. I think taking the roof down is probably going to take longer, but if they can get that length down to like a day or two of installation, or let's call it a week, then that to me is much more of a closer, more important metric to watch than what's the price. Because if they can't, if they're they're probably not going to have a huge market at the higher pricing that they have, but it sounds like they've got at least enough demand, to kind of do that. So I view it as sort of a short-term gross margin, kind of boost where they've got enough demand. They know that they're not going to be optimally installing these right now. So why not try to at least not make the gross margin negative like it was last quarter?
Yeah, yeah,
So,
yeah. A couple houses down from where I live, they replaced their roof, but they had like 10 people up on the roof, and like in one day, like 2 days, they're done. It's like crazy how
yeah,
fast they do it. So it's kind of scary to think Tesla roof can take 3 weeks, for a crew of 6 people or something, or even more. Um, yeah, it's going to be interesting. I think yeah, solar roof has so much potential, but it has so much complexity because it's such a new, ambitious project.
yeah.
Once Tesla, it seems like they get it down, like they actually, as you're saying, get the installation, process costs, labor down, improve the product. Then I don't know if there's going to be really much competition because I don't know who's as ambitious as Elon and Tesla to even try something like a solar roof. Just
Well, Dow
yeah,
actually, Dow Chemical introduced a product like this like 5 years ago, maybe, and there was just no demand, and it was crazy expensive, and
yeah, exactly,
they
yeah.
weren't trying to vertically integrate like
Hmm.
like Tesla is, and like they care about the installation process. Where Dow Chemical just created a cool tile, and they wanted to like have normal contractors just install it, and it's like you don't want roof contractors trying to figure out electrical installation. Like you need to have like a holistic
Yeah, yeah,
thought process of how you're going to deliver that customer experience when you're, maybe putting in a new breaker and putting in new power walls, putting in tiles, but also kind of interconnecting them
hmm,
as circuits the way that you need to make these products work. So,
yeah.
yeah, it's nobody's trying it. Like as far as I can tell, nobody else is really actively trying to
Yeah.
deliver the product.
Yeah, yeah. It's yeah, it's gonna be a tough one to copy too, I think. Because it's not just one thing, it's an entire like process of many,
Yeah,
many things.
and it has to look okay.
Yeah, yeah.
Like
Yeah.
hiding those solar panels is no small feat. Like
Yeah, exactly.
uh it's very complicated.
Yep. Matt, I enjoyed our conversation on Tesla Energy. For this part one, we talked about Cybertrucks and Tesla full self-driving, and that was a great episode, so you guys can check that out. I'll link it in the video description. I'll link to Matt's YouTube channel. It's called Spark Spread. He's got some great videos on there, and I'll also link to Matt's Twitter account as well in the video description. Do you have anything else you wanted to share, or anything on your mind?
No, nothing else right now. Really appreciate the time, Dave. This is a fun conversation.
Yeah, yeah, it's fun getting to know you, and yeah, wish you the best, and we'll see you later.
Thanks, Dave.
All right, bye.